Can you hear me? Can you hear me? All right, let me adjust this real quick. Let me adjust this real quick. I'm about to get it popping. Turn that on. All right. Share screen. Okay. Almost there. Okay. All right, now we're ready to rock. So what happened earlier was I thought that this was being recorded with audio, but it wasn't. So essentially, I have to repeat myself again, and it's all good. But let's start off like this. This chart is Tesla today, April the 4th, 2024. And what we are looking at is what took place today, what we were looking for before the market started, and what transpired after the market did start. So you're going to see some lines on my chart. And if you see a line that is green, that represents a demand level. So that represents a level where the price has bounced up off of this level or this line in previous history. Okay, if you see a red line, that means that's where price rejected and price pushed down previously in the past. If you see a yellow line represents the pre-market level. So that's anytime after 4:30 or after 4 o'clock when the market's open up until 9:29, just before they open up at 9:30. So anything after hours is going to be marked with a yellow line. Anything purple, that is going to be the 20 EMA. We're not going to get into that right now, but that's what that is. And any line that is dotted, that just means that that line was placed after the market opened. So it's not essentially, it was not there before the market started. So let's look at what happened in the pre-market, because pre-market gave us a lot of things that kind of dictated how the day went. And these were things that kind of caught my attention. So we're looking at Tesla on the 15-minute chart. You see here, the main thing that stood out to me were these low-hanging wicks. So at this is in army time, but like 7:15 this morning, this wick was made, a low of 168.33. Then at 8:15 a.m., a low was made of 169.17. So these were levels of pre-market lows where the price touched that level and bounced back up. And every time it bounced back up, the following candles rose above that price. So that gave me reason to believe that when the market opens, if the prices got to that level, there's a strong reason to believe that the price will go high. Right now, what I wanted to do is I wanted to play puts. So I wanted to go short the market. And the reason I wanted to go short was because anytime there's this pre-market move up to the upside, I tend to look down, right? I'm not really getting hypnotized by the upside movement. I'm looking forward to it getting to a level of resistance and possibly dropping as soon as the market opens. And that's essentially what happened. So I have two red lines here. Let me just take one off because they're so close to each other, and I don't know why they're so close, but let's take off one line, and let's leave this one here. Well, we took off the wrong one, but it's okay. We'll bring it back to where that one was. So essentially, I came in looking for a rejection off of 170.21. Okay, now the reason I wanted a rejection off of 170.21 was because that was the previous low back here on April 1st at 11 a.m. The low was 170.21. All right, so there was a red line drawn at the bottom of this wick. Also, white lines on this chart represent whole numbers because stocks are known to gravitate toward whole numbers. So, if it's the 180 level, then you might want to look out for price movement at 180 more so than at 180.4 or 0.6 because it's not a whole number, that's a decimal. So whole numbers are marked by white, which lets me know if price is there, just pay extra attention to that area. So we have this red line right above the white line, okay? So again, this is where price pushed up essentially off of this low here. But the following day, pre-market, this big red candle pushed it all the way down to a new demand level. Okay, so what we had to do was turn that into a resistance level. So now we go over here and we look for pre-market indications that we're going to get back up to that level. So let's zoom into the 1 minute chart. Since the 1 minute chart is what I played this morning, let's look and see what happened. So we have our red line here for 170.21. What we did was we played puts right at the open at 9:30. The premium on the options dropped a little bit, probably about $8-10 from pre-market to when the market opened up, and that was because of this big spike up. So essentially, we bought somewhere up in this higher level and price came down. So again, once this wick came in with this bearish wick top, that gave us confirmation that, hey, the buyers were in control, but here come the sellers and they're pushing the price down, and we close right at this. We close at 170.03, so we close slightly above that 170 level of whole number. All right. What does the next candle do? The next candle opens up at 170, so it opens up 3 cents lower than where it just closed, and the low here is all the way down to 169.31, and it closed at 169.49. So that was automatic a rejection of this whole number at 170. All right, so we were already up in the trade. The trade turned out to be a 28% trade. We get out of here at 9:35. Now notice that we have yellow and green, yellow and green. Now, whenever yellow and green on this chart come together, I've seen that usually there's more confluence because you have pre-market lows or a pre-market high coupled with a demand level. So if we have a demand level here and we're essentially looking for an upward move, look at this pre-market level right here, level number 1. Okay, we shoot straight through the pre-market level, and we shoot straight through that pre-market demand zone. Okay, after we get down to the demand zone, we get down to demand zone number 2. At demand zone number 2, you see we're right there with pre-market levels. Since we got out at 9:35, obviously we did that because we saw our line was slowly approaching. Okay, so we got out of that. Now, this is where it gets tricky. Around 9:46, you get that big red wick back to the downside, giving you the illusion that we're going to break further down and continue a downtrend, which I felt probably wouldn't happen, only because this support seemed to be strong. And you notice the wicks above started to change from bearish wicks to bullish wicks. So now we have wicks at the bottom, even though they're red. Anytime I see wicks at the bottom, I think of like a rocket, and it's possible that this rocket is going to go up soon, right? So you start to see this, wicks up top turn to wicks at the bottom, right? So that's a bullish move. But what really caught my attention was this big green candle here at 950. So this candle here at 950, that broke above all of these levels currently that we had at that current time. But yet we still saw bearish, wicks above, but it wasn't a serious push back down to the downside. It was just a little slight move. So clue number 2 was the next previous higher low, right? Because we essentially started up here, we made higher high, we came down for a higher low or a lower low, we made a lower high and then another lower low. Here was the higher high, which also closed above previous support. Previous demand, because this was a wick top, closed above it, kind of held above it, came back down. Now, indication number 2 was, again, the higher low. We had this big red candle come down, drop down to 168.37. Then automatically, we kind of turn that into support again. So now you have a triple bottom. You have a bottom here. You have a bottom here that broke below and broke back above and held above, which is very bullish. Then the third leg here is a higher high with more upward confirmation back above pre-market highs. So at that point, I was a little hesitant to get back into the trade. But looking back at it, there were a lot of indications that led to reasons to possibly get into the trade. Here, my main thing as well is whenever there are wicks at the top, I try to make sure that there's a good candle close above that wick. No matter when it happens, I just need a candle close above this wick to let me know that we are above where the sellers were pushing the price down. Because again, above this wick here at 169.86, the last time we were there at 9:32, we blew past it. Last time we got there at 9:51, we dropped down and blew past it. So now we finally get a close above that here at 10:15. So 10:15, we get a close back above that 170 level. We get a close of 170.04. Now 170.03 was the high back here at 9:32. So it's a back and forth game of these numbers that you have to keep in mind. So essentially 10:26, once you get that close above, or actually 10:15, that should have been your entry right there. No matter what happened afterwards, just get in and you're out. Could very well be, I could say, this low below this candle wick here, because this low was 169.43. This one was 169.47, so it didn't get there. This one was 44, so it didn't get there. So even if you had your stop to the penny at 169.43, you would have not gotten stopped out. Me personally, if I would have got in here at 10:15, I would have put the stop down here at this level of pre-market high or pre-market low in demand, because that's where I've seen price move up to. So I wouldn't get alarmed until price dropped below that point. So now that we have gotten above that, essentially respected the levels. The only other level to break through was this high wick here, which was made at 9:31 when the market first opened. And that would have been made by this wick here around 10:45. So even if you wanted to wait for that confirmation, you still have higher lows, higher highs, higher lows, and higher highs. This is a consistent uptrend, right? So we could essentially draw an uptrend line, which we don't really use much, but just so you can see, the gradual progression going up. There's nothing bearish about that, and once you closed above this 170.75, which was kind of the pre-market or the opening high, you got to pull back to that level here on green, and then you got a nice move back to the upside. So it was a break and retest, essentially, of the opening high. So that right there is the icing on the cake to let you know they have now turned this previous resistance into support. So now you can expect the move to go higher, right? Now, this would have been a lovely entry number 2 to get into. This purple line, what's that? That is the 20 EMA. Now, the 20 EMA is, of course, a level of, I would say, pretty certainty. Like, it respects, it holds up, and whenever you get close to that level, you have to pay close attention to what happens there. But we clearly get a break and retest of that level, just like we did up here. We got the break, 10:52, a retest here, 11:02, bounce back up. And yeah, it was pretty elementary. It was nice. And it continued to the upside until we got a break back below, and then a drop down to the downside. So yeah, I mean, everything was good. The main thing I would say is to keep an eye out for a lot of these higher lows that come out of the gate within the first half an hour of the market. It's been happening a lot lately. The Qs had that happen not too long ago. SPY had that happen. Sometimes it happens with it was Tesla today, but yeah. And these plays are the plays that can really get you, because if you think about it, if I had the mentality that I had, but really used it to my advantage, I would have waited and went long, right? But I did right because I shorted at the level where I needed to short. But at the same time, if I set these demand levels in pre-market, right, and I'm saying, okay, price is going to probably retrace back down to this level and bounce up, and it's going to probably retrace back down to this level and bounce up. So if I know that, yes, I can short it back into that level, but let's just say it never made it to this second level of support. Let's say it just stopped right here and bounced back up. That would not have been a good risk to reward, even though my risk is pretty much this red line here is my out, and all of this is my risk, yes. But if we're shorting into demand levels, that's not really the best thing to do. I mean, it's kind of an easy thing to do because you say, okay, here's supply, here's demand. So we know supply has to get to demand in order for things to happen. So it makes sense. But logically, you kind of want to be where demand is, because obviously demand is heavier than supply most times. So, and it's clear it didn't drop there. Now, who wants to be patient and watch it, drop down and then wait and then wait and then, get the pullback and then, wait? Because a lot of people who got in this first candle here, if you got that pullback, some people could have exited because it could have triggered a lot of stops. But the main thing is to wait for the confirmation of a higher high to happen in order to take that long position. So yeah, that's pretty much that. One other thing was the Qs and the SPY, which had some late day activity that really wasn't aware of and I wasn't there for. But kind of the same thing. Our idea was to short off of this 446.5 level. And let's see what time we actually took the play, because we did get into a small trade. So the Qs we got in at 10:22 a.m. Now the only problem with this trade is that this trade was not at a key level. This was based off of what we saw on the chart. And, our level was all the way up here, right? So we had our opportunity to short right here because we had a break of the 465 level or the 460.5 level. And we came right back up, retested it, came down to pre-market lows, dropped below it. So that was the whole play. And it came back up to retest the whole number level. And that's where we got in at 10:22, right? So we saw that right around here as, okay, we're rejecting 446. So let's get in around 445 and a half. The actual level to get out of was about 3 minutes later on this candle at 10:24. It really wasn't much of a support level. I mean, as you see, these lines here were added afterwards. I mean, we do kind of see a pre-market consolidation right here now that I look at it. So let's just add this level right there. That's kind of like a pre-market mini level. Let's go back and just see if anything else touched that level that we might have missed. Not really. 444.78 was a level, but we didn't get down there. So yeah, I mean, that was a mini level. We were expecting a move down to the 444.08 level, right? That's why it's red. That's why we have the white there. We felt that was the wrong level. So we expected a continuational drop, maybe a pullback, right? And as you see, it teased that pullback all day or for the first hour of the day. It came down 1036. It looked like it was trying to break and came back down 1053. Looked like it wanted to break. Came back down 1114. It looked like it wanted to break. Then all of a sudden, 1130, this is when I got out, right? Which part of risk management is accepting when you're wrong and getting out before things get too bad. And lately, that's been kind of a struggle. So this actually is a thing that I'm glad about because, yeah, this could have been a lot worse. I mean, it actually could have been a whole lot better because this could have turned into like a $600 trade. But the way that we have to look at it is not about what it could have turned into. It's about the capital that you protected and sticking to what the strategy is. The strategy was not to hold all the way back up here or to do anything crazy. The strategy was for it to break this 445 and to come down to at least this 44 3/4 or 44 level. Okay. So since I saw all this consolidation and you want to break up, I said, okay, let's just get out. I don't have time for it. Okay. Now let's keep in mind there's no real pre-market levels to, catch out here, right? All we know is that this 445 is pretty strong. 445 is strong. Excuse me. And we move up. I don't know why this red line is here for resistance because it didn't serve any purpose. So we're just going to remove this line. But what we could have done intraday is maybe made more of a concise line like this, I would say, as kind of like a support term resistance. Or you could move it up a little bit more, right, which I kind of like that right there. Or find a whole dollar level. It's not really one close, but let's just take that out of here, right? All in all, pre-market is up here at 446. So we really don't want to see any movement until we get above 446, right? Because that's our new, I guess, support turned resistance and then back turned to support. I don't know. I mean, it was a weird chart. It was still resistance up here. We would have to draw this whole dollar level right there, turn this into red for resistance. And also, since this is a whole dollar level, we're going to turn that white. Okay, now here's my concern. As the day went on, let's look at, I don't even know where to start. Well, let's start here. 144. We get a break below this 464 level again, right? Whole number level. That's where we touched it, bounced up, and now we came back to it. We break it, we pull back, we dip down. Cool. We pull back, we dip down again. Wow. Now that was quick. Now we're back at the same level where we essentially got out. Now keep in mind the puts that we have are for the 444 level, actually for the 443 level. So once you hit 443, that's when you really start seeing your bang for your buck, and you start getting into, the twos and the 300s, right? So as we come down, I mean, this is just pretty intense here. Let's zoom in a little bit more. I mean, you just get breakdown after breakdown after breakdown after breakdown after breakdown after more breakdown and more breakdown, and you just fade off. And our target was way up here, 445. We're all the way down here, 435, 436. And this is something that really takes into account of how the market moves. In hindsight, you want to think, okay, wow, look at that chart. Oh my goodness. That is crazy. Yeah, I didn't even realize it was that much of a move, but yeah, that's just pretty insane. So yeah, I don't really know what else to say about that. I mean, would have been nice to be in that while that happened, because again, the whole idea was for it to break below this level up here. As you see it clearly, I mean, it just took out all of the gains of this whole week. It just it just destroyed it all. So good luck to anybody who got in that trade. But that pretty much sums it up for this video. The next ones are going to be based on supply and demand, psychology videos, a little bit of this, a little bit of that. But it is what it is. We're going to keep moving, keep pushing, build the community up. Whoever watches this, just like and subscribe. Stay tuned for more good information on market, option analysis, Nasdaq, S&P 500. All right, so that's about it. Peace and love. Stay blessed. And that's it.